Welcome back to the new Yachtsman channel. Today, I want to introduce you to Jerry Norman. He's an insurance expert I've relied on many times over the years to help new yachtsmen get insurance for the first time on their yacht. And we're just going to go through some of the things he's looking for and what you should expect with the process and with the cost of insuring your yacht for the first time. Jerry, why don't you introduce yourself?
Yep, thank you, Bill. Yeah, my name is Jerry Norman with Novamar Insurance, and we specialize in boat and yacht insurance and have done so for since 1987. I've been doing this for over 20 years and based in Florida. So working with vessels really nationwide, also internationally, but a lot of vessels centered around the East Coast and the southeastern portion of the United States. And all vessels from small to large and unlimited in size. So we work with all major marine insurance markets that are working in the industry currently. We keep our eyes on emerging markets as well. So when a quality and viable emerging market comes in, we're able to offer that to our customers, whether that's for a renewal customer or a new customer that might be coming into the marketplace. And typically what we do with our customers is we will look at all options that are available for them. We shop the market for them. We bring them those options. We get them to them in writing. And then we have conversations afterwards, comparing and contrasting, answering questions, really with the idea of sifting through those various options, of coming to really a best value and a best fit for them. So cost, quality, and then also capability of the company that best fits what they're doing with the vessel.
Jerry, I wanted to ask you, as a new yachtsman, I know that quite often we should expect that we're going to need a captain while we move the boat because the new yachtsman doesn't have the resume and the experience to necessarily operate the boat himself. What does that look like? Do I have to employ somebody full time or only when the boat is moving? What do you typically see from the insurance companies as a requirement for a licensed captain?
Sure. Good question, Bill. And it's a question that has a couple of different answers or several different answers depending on an insured's experience and ownership that they're bringing to the table with the new vessel, the length and value of the vessel, and where that vessel is going to be primarily moored on a year-round basis. So typically, if an insured, the way the market is, typically underwriters look for jumps in size of no greater than 10-foot increments into a vessel that they're buying versus what they're coming from. So if they've owned a 35, ideally an underwriter would be looking at a maximum of a purchase vessel of 45. Some companies can go up to 15 feet, and other companies will have a little bit of leeway in there, depending on the experience that a client might bring to the table. He might have a lot of operating experience we can really build into his resume for underwriting. Or he might have even been a captain or a licensed captain himself at some point, which we can bring in to underwriting as well. So there's those variables that come in. But if a captain is required, say for instance, a new owner is jumping, maybe 18 feet in size, and he's got pretty good experience, but it's not enough for an underwriter to say, hey, we're good without any captain training. We've got options where they would quote, or the quote would be presented with the requirement that the buyer, the new boat buyer, work with the captain for an X amount of time or an X number of hours, for instance. And that can range, it can go from 20 hours, they might say 30 hours, or they might even say an undetermined amount of time until the point where the captain will submit a captain sign-off form, a competency of operation form, and we've got those forms in-house. So the captain, after his training, can fill that out, send it in to us, we submit it to underwriters, the underwriters review it, everything looks good on the sign-off form from the captain, then the requirement of having the captain on the policy is lifted, and now the insured is operating on his own and moving forward from there.
What about, I see, the yacht being used as the Florida second home quite often, and maybe it's not moving for a couple of months. So let's assume the boat is sitting in Twin Dolphin Marina here in Bradenton for 2 months, and the owner wants to stay aboard as their winter home. Do they need a captain on board daily, or are they okay on their own, and then they only need a captain when they're going to move it to the next port?
Right. Typically, they would be okay on their own. They would just really need a captain for the navigation if they were under that captain warranty. So at the dock, they're fine. They're good. Just when the boat would be moving.
Okay. So I quite often see new yachtsmen, they'll go on a 2 or 3 week cruise, and then maybe they sit in Key West for a month. So they wouldn't have to have the captain on board for the month in Key West, only as soon as they leave the dock, right?
Correct. Right.
Okay. What about cruising area? I know that different insurance companies kind of insure for a region. Um, could you talk a little bit about what a typical cruising area is with regards to the Caribbean, the Bahamas, and maybe talk a little bit about hurricane season as well?
Sure. Okay. Yeah, typical cruising territories, there will be a couple of them or a number of them along the US East Coast, and then coming down into Florida, and then wrapping around Florida into the Gulf. And the basic territories will break down like this. Typically, for say an East Coast navigating vessel, which might be located in the mid-Atlantic or something like that, say Chesapeake, a common territory would be Brunswick, Georgia, and north up to typically Eastport, Maine, or Brunswick in Canada. That's a typical East Coast territory. A add-on to that, or in addition to that, would be Florida navigation, so south of Brunswick or south of the Florida-Georgia border, and then wrapping around. Typically, Florida would include all the way to Pensacola. And that can be added on a full-time basis, so they've got the ability to navigate in Florida year-round, or that can be added on a seasonal basis where they would navigate south of that Florida-Georgia border, really just between 1 June and 1 November. That way they're staying out of Florida during hurricane season. They typically have a lesser cost to their insurance in doing that. And then the reason for the lower cost is the company is not exposed in the Florida region during hurricane season. So those are some options as pertains to the East Coast and Florida. Bahamas is an adjunct or an add-on to that. So typically it's a mix really with Bahamas. Some companies will add just Bahamas. Some will add Bahamas, Turks and Caicos inclusive. So, but when the Bahamas are added, it's a territory, there's a charge for it, and the vessels, once they're added, they've got the ability to navigate the Bahamas. So that is an option that's fairly readily added onto policies currently. Caribbean is another territory as well, and you can kind of think of these territories, as modules. So they can be added on or should be added on as you're expected to use them. You don't need to carry them if you're not going to use them for any particular policy term, which is usually about 12 months. So the Caribbean can be added on as well. Caribbean is a more involved underwriting process. Underwriters typically would like to see an itinerary for Caribbean, where you're going, and a 12-month itinerary or your cruising plan in total. It can be a seasonal trip down and back, or if you're going full Caribbean for the full year, the itinerary they would want to see. And then also they would probably want to see the vessel, where it would be during storm season within that 12-month itinerary. And ideally, underwriters would be looking for the vessel to be located south of 12 degrees 40 minutes north between 1 June and 1 November. That's the lower belt of the hurricane zone, or back up into their East Coast or Florida territory outside the Caribbean. Caribbean, depending on the value of vessel or type of vessel or the person's experience, they might ask that a captain be employed for the Caribbean portion or be on the vessel or something to that nature, or qualify the insured that He has the experience for Caribbean navigation, meaning prior trips to and from the Caribbean, offshore experience, and so forth. And if that's the case, they can qualify the owners individually without a captain.
In this channel, I'm targeting kind of that 50 to 80 foot vessel in the $1 to $4 million range. Given those parameters, what would you typically see as a deductible? What do the deductibles look like for the client?
Yeah, typically in that value range, Bill, they're going to be 1% hull deductibles. That's a standard deductible. 2% is also common in that value of vessel. It may go into a higher deductible if the vessel is a little bit older, for instance, and more toward the owner-operator side. If it's more toward the owner-operator side, the company could increase that deductible just depending on how they are looking at as far as assessing the risk exposure to that vessel. For instance, if that vessel is located in South Florida, in Miami, an area where statistically claims are higher, there's more frequency of claims, they might have a 3% or a 4% on that vessel owner operator, versus if it were over in an area that was lesser claims, for instance, statistically, Jacksonville or north of St. Pete, somewhere in those areas, they might quote a 2%. So it can vary a little bit.
What about liability? I know a lot of these clients, God forbid something bad happens to somebody. What kind of liability insurance comes with the basic policy? And would you recommend that the client have liability beyond the maritime insurance policy?
Right. Yeah. Good question. And liability is very important because it's designed to protect, the net worth of a client. So it's designed two things: to provide liability for in and around the vessel, but then also for the net worth of the client if there's a severe liability issue. So the rule of thumb on liability in boat or yacht policies is you want your liability to at least match the value of the vessel and not below that. So that's kind of just a starting point. So if you have $1 million vessel, you're going to want to look at $1 million in liability with that policy. If there are other considerations in liability as well, those considerations could be umbrella. You get an umbrella coverage that could come over the vessel, or also paid crew on the vessel. If you have paid crew on the vessel, that constitutes a Jones Act exposure potentially. If they're injured, they would have access to be able to claim through a Jones Act, which is U.S. maritime law. Any paid person on a U.S. vessel will have access into Jones Act if they're injured. So a consideration, if you do have paid crew, to go above, say, that $1 million on your liability, if you have $1 million vessel, would be if you wanted very good coverage to protect you from a Jones Act claim, which would be an injury claim from a paid crew. You might want to look at increments of another $1 million, so $2 million in that case. You might even want to go a little bit higher. So paid crew will be a criteria that will warrant, or you should open up the question of, do I want higher liability limits? And you can have those conversations. Regarding umbrella coverages, most higher end clients do carry umbrellas. A lot of people carry umbrellas anyway. It's a good, inexpensive way to get higher liability limits. But there's a consideration with umbrellas. Umbrellas will typically not cover liability toward Jones Act or paid crew claims, because umbrellas are different jurisdiction than marine liability. Marine liability is protection and indemnity. It protects for Jones Act. Umbrellas are a state jurisdiction. They're a general liability. They typically don't go into a federal jurisdiction like the Jones Act. So if you want to get your paid crew coverage within the umbrella, it may not be available. So you might want to consider going higher liability limits in your marine policy. Also, with an umbrella, there's a consideration for vessel length. A lot of the umbrellas have limits on the lengths or the value or the horsepower on vessels. They might limit the umbrella to ride over the top of a vessel maximum of 42 feet. So that's a very common length, or other stipulations, depends on the umbrella carrier. So if you're relying on your umbrella to cover your vessel, question paid crew, and also question just the length and the value of vessel. And if your umbrella can't respond to those two things, consider increasing your liability in your marine policy.
That's great. Thank you for clarifying that. One last question before we go today. A lot of clients always ask me, should I buy this boat individually, or should I set up an LLC or have it in my trust? Are there any insurance considerations to how you take title to the vessel? What entity actually owns the vessel?
Sure. Yeah. Another good question. That is a question that's just posed fairly often, and there are some considerations in looking at an entity for insuring the vessel. And the main one from an insurance perspective is if the entity is an asset holding entity for the vessel only, meaning there's not an operation to the entity, there's not an active company or employees other than what might be employed with the vessel, like a crew. So the reason for that is insurance underwriters will want to insure really just an asset holding type of LLC or entity, and not an operating entity, in that the insurance policies for the vessel are private pleasure in nature. So they're going to cover a private pleasure risk, and that's it. Essentially, the best vessel in an asset holding LLC is private pleasure and usage. There's no further exposure from an operational standpoint of the actual entity itself. If somebody is looking to put that vessel into an existing entity, they might have a business that they want to insure the boat under, that's actually operating, or with employees, revenues that are earned from some methods of operation. The underwriters are going to pull back from that. They're not going to want to do that, because essentially they're insuring they're writing a policy that is actually commercial and operationally in action. So their private pleasure policy would actually be not a fit to insure an operation that's commercially operating with operations. So they would not want to insure that. They would just want to insure in an asset holding LLC.
Gotcha. One last question. Can you give us like ballpark prices? I know it's hard to quote an actual insurance policy in general, but give people a ballpark. Like if I'm buying $1.5 million used boat, or I'm buying a new full $4 million boat, maybe just give me an idea of what customers should expect rate-wise within a broad scope.
Okay. Yep. Yeah, and that'll be a little bit dependent on locations of the vessels, and also whether there's a full-time crew employed with the vessel. So there's kind of two tracks there on that, Bill. If you're up along the East Coast and you're an owner-operator vessel of say 1.5 million or so, you can probably expect a rate somewhere around somewhere around 0.75% of the value of the vessel. So somewhere around 10,000, 12,000, somewhere in there, just under 1% of the vessel as an annual premium. If you are a more expensive vessel, like say the $4 million vessel, and you're fully crewed up along the East Coast, you're probably going to have a more competitive rate. You're probably going to be closer down to 0.65, 0.6, somewhere in there. If you're down in Florida on a fully crewed vessel, $4 million, you're probably going to have a little bit higher rate. You could be somewhere 0.75 on that one, 0.85. If you're uncrewed in Florida on those value of vessels, you can probably look for about a 1% rate to a 1 point, depending on the value, to maybe a 1.3, 1.5% rate.
Okay. So it sounds like if I'm just budgeting as a new yachtsman, I could say it's probably something a little bit less than 1% for insurance.
Yep, overall.
Okay. Thank you very much, Jerry. I think that was very informative, and I'm sure the new yachtsmen will really enjoy getting that information. All of you watching, please like and subscribe, and please send us some comments and questions, and we'll get back to you as soon as we can. And look forward to seeing you on the next episode.